Hello guys and welcome to Hakman Traders. In this video I'll be showing to you guys why I use the averaging concept, like why I average stocks at a certain time. Now, like I said in the previous videos, uh, the averaging concept is better that if you have bought a stock at a highest price and you want to decrease the buying price, then you it is like you buy one share at a highest price and then three shares at a lowest price. So the overall buying price at which you have bought that decreases to in favor of the lowest price. So this is why we use the averaging concept. So I use the averaging concept because sometimes uh, I make bad trades, or let's say I buy a stock at a highest price. So generally I decrease the value by buying the stock at the lowest prices as well. So now I'm going to show to you in the charts, in these charts, that why I buy the stock at E, but why I use the averaging concept. So averaging a certain stock is better when you have bought a stock at a highest price. So try to use it as much as possible as it is available to you guys. So use it in your trading and know that it is the better form of trading. So now I've bought the stock at this area, and as it declined, so I bought 1000 shares at this point and then it declined in value. So at these points, somewhere between here, I buy more stocks and then the value increased from these points. So the total value of mine came to 18.50 something, then, or maybe 18.16 or 18.35. So and then it increases in value. So this is the overall, this is why I use the averaging concept. So from here, 20.20 to 18 points, so I have declined its value by 2 rupees. So that is the benefit of using the averaging concept. So here, now, here you can see I've applied the averaging concept. Now let me mark this out so that you guys can know where, from where I have 18.15. Let me make it bold and brighter. So this much, by this far I decrease the value of the stock. So this is why I use the averaging concept, because it gives me a greater opportunity, a great entry point, so a great position, and from that point, from the lowest price, I make much more profit just by using the averaging concept. So you guys can see that this much decline I've came in the stock that I've bought later. So this much decline uh, appeared in the stock after I buy some shares later on. So this is why you should use the averaging concept, because you can see it will give you it give you um, it will give you a greater entry point at times like these. So try to buy the stock now, due to this reason that I bought this is the overall buying price, so I bought the stocks at these points, maybe in 17 something. So in 17 rupees. So I bought stocks at these points, but there was also, like, this also has got power. So now the overall the buying price was put slightly above the prices that at which I've bought at times. So it would also happen to you as well, because once you buy the stock at a highest price and then again you buy the stock at lowest prices, so this would appear in your stock. So yes, now here I'm seeing it in my phone. Like, I bought the stock at 17.49. I can't show that to you guys in this right now. So 17.49, one trade was at 17.4, one was at 17.50. Again, I guess, no, those were the two trades that I bought, 17.49 and 17.50. So those stocks, those the overall the average came out 18.30, 18.15 something. So let's take out the average ourselves. So now let's see what was it. 18 20.20 plus 17 point sorry 17.49 plus 17.49 equal to divide by 3, 18.39. So I guess this is the overall the average. So I guess this is the average 18.3. Let's make it 18.4. So I guess this is the average averaging of it. So it might be this as well. So like it all depends upon how much shares you buy at the lowest price. If you buy more shares at the lowest price, this value will decrease more in favor of the lowest price. And if you bought shares at a highest price and then you buy shares at the lowest price, so the mm, the buying price, the average price, that would decrease slowly, so if you buy more shares at the lowest price, so it will faster, and if decrease faster and in favor of the lowest price. And if you bought less shares at the lowest price and more shares at the highest price, so the buying price or the average price would close more in favor of the highest price and would move slower, decline slower. So this is how the averaging concept works, and this is how you should apply the averaging concept. And this is why I use the averaging. This is why I average stocks at certain times, because most of the time I buy the stock at a highest price. Just in this case, it was at this point, so that is why I buy the stock at these prices as well, 17.49 and 17.50, because these areas provide me a greater opportunity. Now you can see it is a total confirmation right here. So now from this point beyond, it will move further and close above, so I gain about this much profit as well. So try to use the average concept as much possible, because you see I've explained in this video as well in the previous videos. So you saw that how beneficial it is to use the averaging concept in your trading. And that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market or the forex market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.